Hello, good afternoon. Happy Thursday. We have some big data around inflation and sales that we're going to cover here this week, and a little shorter session as we do have our quarterly webinar this evening. So no question of the week, but we're going to cover a lot of what has happened around inflation and sales and what that means for some, let's call it market confusion this week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news and data and trends we're watching, hopefully weed out a bit of the noise along the way. And this week, I can tell you, is certainly not full of noise. It's full of a lot of very important data pieces. So basically, if I go back to last week, I want to go back to Friday last week. Friday last week, we had consumer sentiment come out, and the number was actually higher than expected, which I think is actually very fitting for what we've seen in the markets. We've seen this kind of this extreme optimism, let's call it. That's probably the best word. Extreme optimism for what's going on with the Fed and the markets, and this being kind of like the pivot out of all of this. Consumer sentiment obviously higher as part of that, and I guess is maybe a sign of everything else that we've seen as well. Now, fast forward to this week, and we've got a little different story. Tuesday, we had CPI numbers come out. So CPI was up 0.5% for the month of January, for the month. And even core CPI, which takes out some of the more volatile measurements of inflation, was still up 0.4%. So we are at about, I think it's about 6.4% year over year inflation. And at a point where not only the Fed, but everybody was, writing home that inflation was coming down. So, we've always been in the camp that this may be around longer than expected. This, I think, is a sign that points towards that. And what is, I think, extremely important about this CPI number is that it's switched a lot from goods to services that are driving a lot of this inflation. The reason I bring that up, and for those who follow us, you've probably heard me say this a million times, but the reason I bring that up is that services is a much harder piece of the puzzle or piece of the pie to bring back down, right? As services inflation picks up, that is much harder to actually reduce those prices in the future or see them slow down to some degree. So that can be a much stickier component to a higher inflation number, I guess is what I'm really trying to say. Fast forward to Wednesday, retail sales, which are very important, were up 3%. Some of that could be a factor of the increased Social Security benefits, so keep that in mind. There was a large increase this year due to the inflation issues, and so it's possible that some of these retail sales numbers were a little inflated based on that. But nonetheless, I mean, again, the CPI number is what's extremely important and what I think paints a very different story than what the market has been kind of leading. Today, on Thursday, we had initial jobless claims come out, and another good number, lower than expected. 194,000 was the initial jobless claims number on Thursday. So I think we have with this data, we're just seeing a market that I think is very confused. I think that we all want to be through this, and we want inflation behind us, and we want the Fed to stop raising rates. But, I just don't know that we're there yet. Clearly, with a 0.5% inflation rate for the month of January, that shows we've got some work to ahead of us here. That's for sure. And again, even if you look at inside of those numbers, what's important to note is that there certainly was a little bit of an impact from energy prices this month. But again, the services number was one of the bigger drivers, and it was a little more widespread as well. There were certainly some areas that actually came down a little bit, but just know that the energy prices are not the only factor in this higher CPI number that we got on Tuesday. So we will see what comes. We are at the higher end of the range we've been in for 9 months or so, maybe a little bit above that higher end of the range, but for the most part in there. So we will see what comes. If we can break through this, it could be a little bit of a different story. But if we get some more bad data, and today is a slightly down day, we'll have to see kind of what shakes out from here. Tying into that, next week is a short week as a heads up. Monday, we've got a holiday, so markets will be closed for trading. But then we get the FOMC minutes So gear up for that, because that is going to be really important with all this confusion about what's actually going on with the Fed and inflation. The FOMC minutes will come out next week, and that will give us a little bit of a deeper glimpse into what actually has transpired. In fact, a Fed chair or Fed speaker recently came out and said that they expect 50 basis points. They see a case for 50 basis points in the next hike. Now, obviously, this came out in the media because it is so different than what we've been hearing. There's only one person, keep that in mind. But nonetheless, I think that there are some people that do think inflation is going to be harder to tame, and we will see what that means in the FOMC minutes next week. We also have GDP's first revision for Q4 coming up next week as well. So again, no question of the week for this week, because we do have our event this evening. Hopefully, if you guys are joining, we will see you at 5 p.m. tonight. Otherwise, enjoy your upcoming weekend. We will see you next week and break down especially the FOMC minutes. And if you have the Monday off for the holiday, enjoy the 3-day weekend. Otherwise, we will see you next Thursday.